Hello everyone and welcome back. It's the beginning of a new month here in December, so it's time to check in on my small account using just the wheel strategy. A lot to share with you in this video today, so please stick with me. I'm going to walk you through my exit plan on Medical Properties Trust, as well as take a look back over the past month and see what I've been able to do. With that, before we dive into the video and all those different items, I want to kind of recap what led us to today. And so there's probably a number of people that are maybe seeing these videos and they come in a month number 8 or month number 9 and they're like, oh great, I don't want to watch 10 videos to get an idea of what's been going on here. Just so you know, just as a kind of a brief recap, I started this account in Robinhood with $1,500 and I've just been using cash secured puts mostly to build the account over time, trying to grow a $1,500 account into something much larger. Right now today I have I've deposited $2,400 of my own money. I am currently down on the account by I think $24 or so, which is considerably better than it was a month ago if you saw that last video. So that's kind of how we got to this point, or what I'm doing. If all goes well and my analysis is correct, when I lay out my exit plan for you in this video, you'll see how things will shape up. Let's go ahead and dive into what happened last month and then what I'm going to do going forward. All right, so I've got my spreadsheet here on the screen and we'll just kind of run through things really quickly. You can see my goal was $300. For those of you that are new here, my goal was to try to make $300 in income. Fell considerably short of that. There's just no way. I would have to take on just an inordinate amount of risk to be able to get to that goal. And I'm not going to do that. I don't want to make any just outright foolish decisions if I can avoid it. Me making good decisions is usually foolish enough. But anyways, I didn't get quite to my goal. I took in 7.63% on this $2,400 worth of income, so can't be upset about that. I know if I had just bought the S&P, I'd be up considerably more, so a little bit disappointing in that regard. My current cost per share, my adjusted cost per share, I should say, on Medical Properties Trust, which is my largest holding in this account, is $5.86. And you can see the $183 there is the income that I've made. Received $1 in interest. I bought 5 more shares last month of Medical Properties Trust for a cost of $4.19 to bring me up to a total of 135 total shares. And I also have a put open at the moment, which I think is down to $4 or $5, and we'll see that when we look at Robinhood here in just a second. So that's really all that I've done in the last month. It looks like I received that dividend on 11-20. In fact, I want to talk about that really quickly. You may remember from the previous video that my October income was higher than $17. The way Robinhood reports dividends is once Energy Transfer announced that they were paying a dividend, Robinhood puts it on the account as pending. I went ahead and listed it on my spreadsheet that last month, and so it showed my October income being $6 higher than it is here. I went ahead and moved it over to November because that's when I actually received the $6.25 to be specific. So that brought my November income to 23 and it dropped my October income down to 17. So if you notice that discrepancy, that's where it comes from. So there's the income I've added this month. Again, like I've said in every video, just haven't been able to replicate the $58 I took in May. Just haven't wanted to take that risk with Medical Properties Trust. So I've spent a considerable amount of time today looking at Medical Properties Trust and kind of analyzing it. And with that, let's go and turn our attention over to Thinkorswim and let's go and take a look at the chart in Medical Properties and see what we're going to do going forward there. Okay, so I'll kind of start long term and I'll kind of work my way down to the daily chart where we'll ultimately kind of uncover my exit plan. The first thing I want to take a look at is I've got a trend line tool pulled up, and if I just go ahead and click somewhere near the high, this is back in 2006, 2007, the last time I guess the real estate market was really shaken up. But you can see if you look at this little box that comes up, if you look at the percentage that's right there that my cursor is kind of covering up at the moment, you can see Medical Properties Trust declined by about 82, 83%. I should say that I'm going to make a lot of assumptions in this video, so please do not look at this and say, oh well, he's figured out what's going to happen and this is what I'm going to do as well. Just know that I'm making a lot of assumptions, and Medical Property Trust is not in a particularly good situation. What I'm about to detail for you could never come to pass, and so I may end up holding an even larger bag than I'm already holding. So just know that at the outset here. But if you look at the most recent decline, you can see it's about 83% as well before it had a notable rally here. And so if we're able to get something similar in Medical Properties Trust this go around, then my exit plan will work out quite well. And you can see a couple of things here it seems to be setting up very similar to that last kind of bull run we had here in Medical Properties Trust. Right here on the bar that my cursor is currently hovering over, you can see that is the first touch of this kind of this major resistance area, which was at $9, kind of a nice whole number. It touched it and then of course fell down, rallied back to it, touched it, fell down, rallied back, touched it, fell down even harder here. Ultimately, on the fourth touch, so we had 1, 2, 3, 4, 4 opportunities. It finally broke through before coming back and kind of using these past highs as a little bit of a support area to run up even higher. Now compare that to what we're seeing currently in Medical Properties Trust. We've got the first initial touch of this 550 area. Here it fell down, rallied back, touched it again for a second time. And again, the market's always changing, so I'm drawing some similarities here that may again never come to pass. But so we got 1, 2, touched it again for a third time, fell off even harder, and then now we're rallying back up to attempt possibly to break that area. And if it does, then we may be looking at a rally all the way up as high as about 6 to 650. The other thing, you'll see these pink or purple lines here. The line that I'm hovering over here is the 200 SMA. You can see simple moving average 200 period. So I just kind of drew, if the SMA were linear and it just continued in a straight line down or whichever direction it's headed, looks like we had that final sell-off, which if you look at this sell-off here, it looks very similar to this sell-off here. So starting at the bottom of that large sell-off there, if you draw a trend line up and then you draw a line straight down from the 200 SMA, it looks like on the previous rally, it looked like price held that trend line all the way up until it got back to the 200 SMA. So if that happens again, and we're able to hold this new trend, this is the most sustained uptrend that Medical Properties Trust has seen in some amount of time, really since back in August or possibly even July of this year. So if it's able to continue this trend, then we're on a collision course for essentially this 200 period SMA, where there will really be kind of an intersection. Does Medical Properties Trust want to rebound and go higher, or is it going to hit that 200 period SMA and then fall down again? So my assumption at this moment is we're going to follow this trend line all the way up, which would put us at about the $6, maybe even as high as $6.50 if it breaks it like it did here. You can see it broke this trend line by $1 or $2. If it does that again here, then we may be looking at about $7 before the kind of the bear returns. Medical Properties Trust is kind of in a spot where they've got a lot of debt, and they're going to have to kind of shed that debt if they're going to continue on. And the only way to really shed that debt is to sell those assets so that they can cover it, which means they won't have as much cash flow coming in the form of rents or different payments. That means the dividend would likely be cut again. Currently, their free cash flow is already negative, and they're paying, if you look at the trade tab here, we can see currently they're about 11%. I really see that being cut again, especially if they start to sell assets off and their cash flow begins to dwindle even further. They're going to have to cut that dividend again. And if they cut it in half down to 7 cents, that would still leave them with a respectable dividend of maybe 6 to 7%. So that's kind of my general thesis here. I'm hoping that through the month of December and then early January, it will follow this trend line. And so we'll see if that happens in the days ahead. Of course, it could just hit this major resistance area here and fall back down. And so if that does happen, my exit plan won't work out quite as well, and I'll end up holding a larger bag. And that's fine. If that happens, I'll just continue trying to collect the income. And that being said, I want to introduce you to this tool that I created. But what I want to look at specifically is this stock and options calculator. So I've kind of built it in where you can just jump to it. It's a very simple little calculator, but it just makes things a lot quicker. The math is very simple, very rudimentary. If you've been trading for even a few days, you can do all of the math that this calculator does. It just kind of lays it out here where you can test different scenarios, kind of come to the number that you like or that you think is realistic. So with that, I'm going to walk you through here. So my position as it stands right now, you may remember, and I'm going to pull it up really quickly. Currently, I have 135 shares with an adjusted cost basis of $5.86. So you'll see that I've got 135 and my cost per share is $5.86. My total net on that, my adjusted cost is $791. With that 135 shares, here in just the next couple of days, I'm going to receive a dividend, or it'll go ex-dividend here on, I think, 12-6. and that'll give me a $20.25 dividend. From there, I'm going to sell this, and so I'm going to lay out my exit plan here. And hopefully I can get this to work. I'm going to sell a cash secured put at the 550 strike. That will be in the money. So let's take a quick look at Thinkorswim. The 550 is currently in the money, and I would be able to collect a little bit larger premium for having done so. The mid price is around 52, so hopefully I can get 52 cents for it, or $52 for it. That would ultimately bring me up to 235 shares. What I want to have happen is I want to be assigned those shares at 550. That's the ultimate goal. And then I'm going to turn around as soon as that cash secured put has been assigned. And if I didn't say it, that's on December 15th. Currently, I have the $4 put in Medical Properties Trust that you can see is down to $3 or $4. So I would just roll that one up to the 550 to take in that premium. And so that would ultimately, if I got assigned, which I'm hoping for, then I would have 235 shares. I would turn right around, and I'm going to go ahead and pull Thinkorswim back on the screen. And I would turn right around on this January 5th expiration, and I would sell the $6 call, and I would put this in as a good till canceled order for probably about 10 cents. Let's see what I listed it as here. So I listed it as 15 cents, so I may not be able to get that aggressive. May have to dial that down just a little bit, but I listed it to put in a good till cancel order for 15 cents. If price continues to rally, then I probably could get 15 cents. But even if I only got 10 cents per contract, that would still be $20. Still leave me with 35 shares that I could sell at the current price. Or if I did get lucky and let's say it rallied to 7, then of course my return would be even better. But I would still have that 35 shares. And so let's just assume I sold them at today's current market price, which is about $5.24. That would be a total return of $134.55. So a 10% return in less than a year, I think, is really good, and it's certainly something that I would be happy with or proud of. And remember, that's all in the face of Medical Properties Trust declining by 83%, as we saw. So Medical Properties Trust has been in a serious decline, and if I could walk away with $134, then I would certainly be happy with that, and I think many of you would as well. So that's my exit plan. See, as I mentioned, I'm only down by $24 at the moment. When we last talked, I believe I was down by, you can see I was down right there as much as $250, so that didn't feel very good. But I think when we last talked, I was down by about 150, 140, somewhere in there. Pretty much break even at this point. If I sold everything this week and I took that dividend, I would pretty much straight break even across the board. For the time and energy I've put into Medical Properties Trust, I'd like to take something away from it, and so that's why I laid out the exit plan that leaves me with 130, 150, somewhere in there total return, and that's counting the loss on the actual shares that I own. That's counting everything. All the dividends, all the income that I've made. Certainly, you would probably agree, a lot of work for only $150, but we are looking at a small account. So when you have $1,500 and you make $150, that's a 10% return. I don't know anybody that would be upset year over year with a 10% return. I just deposited the 100 shares, which I mentioned at the beginning of this video. I attempted to roll it a couple of times before I kind of settled on the exit plan that I just described to you. There's the dollar in interest we talked about when I showed you the spreadsheet. And there's the Medical Properties Trust purchase that I made of 5 shares. And then there's the put that I'm currently in that I would be rolling into that 550 strike. And then I made a couple of pennies again on the stock lending. Looks like I closed a put since we last spoke. I closed it for $3 and then ultimately opened this one, and I attempted to roll it there and it just didn't get filled. But that's everything that's happened. The last thing I want to do, and I know I've jumped around in this video more than I typically do, the last thing I want to do is take a quick look back at Thinkorswim so we can see Energy Transfer Partners. Energy Transfer has just been in a slow run up, and so I got to just kind of doing some quick math, and I'm not going to do it here on the screen. But if I had just put the entire 1,500 into Energy Transfer here, didn't do the wheel strategy at all, and I had bought it for about $12.20, I think was the high here, $12.29. If I had bought it for $12.29 and then held it to today's date, I would have made about $200 to $250 if I had just invested the entire $1,500. So certainly disappointing on that front, because when I started this, I was only going to trade Energy Transfer Partners. Then of course I got into Medical Properties Trust because the premiums were nicer. But that's kind of a lesson learned, that just because the premiums are nicer doesn't mean the return's going to be better. So take that under consideration when you're trading your own wheel strategy account. One thing I forgot to say, and I'm going to say it now, is I'm thinking about trading silver, the SLV ETF, and we can go and take a look at that. The last 2 years have really taught me that any individual stock can just, you can wake up one day and it will have crashed by 20-30% just overnight for some news event. It just really doesn't settle well with me, and you maybe have experienced the same. So I've really kind of leaned into ETFs, and maybe that's a mistake. I don't know. We'll see in the days ahead. Silver is within my reach. If I sold out of my Energy Transfer and I was able to close Medical Properties Trust in the next month or two, then I would have enough buying power to be able to sell puts and covered calls on SLV. And while I don't think long-term SLV is going to just go to the moon, I also don't think it's going to hit the floor either. It may go down low, it may go up high, but at the end of the day, I think it's going to trade. You can see on this chart here over the last year, it's just kind of gone up and down. And I think if I'm able to time it really well, then that income that I'm making would ultimately be a nice return. And so that's kind of my thoughts at this moment, and where I've leaned based on what I've seen over the last 2 years, and basically what I've experienced in Medical Properties Trust this year as I've kind of done this video series on growing the small account. But I've been long-winded enough, guys. Thank you so much for sticking around. If you like the video, please do hit the like button or subscribe if you haven't. And until the next video, guys, God bless and take care.